Hi there, my name is Pat Mills, and this is my SWOT analysis for Lighthouse Rentals LLC, which would be a mock company I would hope to start in the recent upcoming years. Anyway, kind of got a good little picture there, and my slogan would be your guiding light to quality rentals. So SWOT analysis, just a little background before we get into the SWOT analysis. Our mission statement and objectives will be to own and operate several rental properties in the student rental housing market, to establish a profitable business that results in ownership of assets, primarily in the form of residential homes, condos, and apartments. These assets should provide value to ownership and function to accrue additional income to ownership through tenants paying rent. So basically buying properties and then turning them into sources of income through student rentals. The objective of Lighthouse Rentals will work to safely grow by acquiring projects at a slow pace. They'll place a priority on not becoming over-leveraged by taking on too much outstanding debt on rental properties purchased. This slow growth process will ensure that volatile fluctuations in the real estate market will not cause detrimental losses to the company or to ownership. So basically, don't want to get over-leveraged on a bunch of properties, have the value decrease, not be able to make payments, etc. I'd want to grow slowly. And that being said, management of properties will begin as a grassroots effort and will fall primarily on the initial ownership, that being me. And once the assets acquired become too large for ownership to solely manage, Lighthouse will outsource management of tenant paperwork, property maintenance, and repair, rent collection, and other services to an outside rental property management company, basically with superior resources to ownership or to me in order to manage it. Or in order to manage it. So basically, hope to grow it to where you have several properties. They're producing enough income through rentals that you can turn it over to a management company and not necessarily wipe your hands of it, but not have to be so overly involved with it. So we'll move forward with the SWOT analysis here. Strengths would be having a slow growth strategy, like previously mentioned, that focuses on purchasing small, affordable rental properties that ownership is financially capable of acquiring and maintaining without becoming over-leveraged or accumulating substantial financial risk. So basically, don't want to go try and buy the biggest, baddest house and have a very large payment that could potentially be hazardous to me. So, start small, start slow, generate income, pay off one property, then move on to the next one. Ownership's commitment to providing quality properties to tenants at affordable prices with great visibility and availability to tenants that places a quality on tenant satisfaction. So basically me being very available to students. I'm sure if you've ever been through undergrad and lived on a campus or near a campus, you've dealt with some landlord characters like I have. I would strive to not be one of those people, and would love to help my tenants in any way that I can, and hope that placing a value on quality would produce repeat business and growth in the business. So that being said, intentions to grow into an entity that can provide substantial income to ownership through the active rental of assets acquired. All right, and then taking portions of profits earned and reinvesting into other properties that can provide an exponential growth effect for the company. So take the rent, pay off one mortgage on one house, start moving that into another house. Hopefully that kind of has a snowball effect, and you keep generating it into acquiring more and more assets as you move along and the years progress. So another strength would be internally in-house closings when buying or selling properties in order to reduce costs to the company. I'd like to eventually get my real estate license so I don't have to deal with the cost of using a real estate agent to buy or sell a house. I'll simply have knowledge of doing that. We'll manage that myself, so I don't have to take that 2% cut off the top and pay it to a real estate agent in order to buy or sell a property. So weaknesses. Low capital resources for initial startup. Obviously, I'm not a big company. I'm not Donald Trump. I can't go out and buy just anything and everything. As far as properties are concerned, I would have to start small. Ownership would have to take out a loan to acquire initial assets in the form of a mortgage for rental properties to own. So obviously, whenever you're taking on any form of debt, that's not ideal. But it's a risk you have to be willing to take. But it's also an internal weakness. My job right now, I don't have enough money to go out and buy 2 or 3 houses at once, And if one were to go under, that would be a very bad thing. Inability of ownership to initially hire a full staff or management company to manage properties. Duties would fall on ownership and could become time consuming while maintaining the responsibilities of ownership's primary career. So I'm a football coach at Western Carolina, and it could be very difficult if you end up having a single property or one or two properties, and you're the one solely responsible for the tenant, or if something breaks, or if the yard needs to be cut or something, and I can't be available through my career. Initially, with the startup cost, I wouldn't be able to hire somebody to manage the property. So you might have a little bit of an issue there, kind of an internal weakness in lieu of pursuing a parallel career. Ownership's inexperience with working with rental properties and the real estate industry would produce a large initial learning curve that could result in poor decisions or require additional capital investment for consultation or amendment. So, I don't necessarily know all the legal workings of, developing an LLC, so you'd have to seek out a lawyer there. Obviously don't know, don't have a real estate license yet, so if you were to purchase a house, you'd have some costs there with a real estate agent. That's definitely a weakness. But just the inexperience, and if something were to happen that I had never faced, or a lawsuit or something like that, obviously there'd be some more money that would need to be spent in order to mend whatever issue that was, probably based on me having to outsource that knowledge based on me not having it initially with the startup of it. But a certain amount of volatility in ownership's career that could result in drastic reduction of income and could cause financial hardships when trying to make payments to notes on properties. So if, as a football coach, if you don't win football games, you could potentially lose your job. So for ownership, that being me, that could be a very bad thing. If you have 2 or 3 properties that you're paying mortgages on, or even one property that you're paying mortgages on, obviously without a job, that's a large weakness right there, just for some fluctuation. But moving forward, your opportunities: large amount of properties available in the vicinity of a university for purchase. People are always looking to buy and sell rental homes, rental properties. Usually they are a little bit more expensive, but there's always opportunity there for purchase. And there's usually a big market for houses for purchase there around the university. High demand for quality student rental properties within reasonable proximity to university campus. So that's definitely an opportunity. If you, students always pay rent, and there's always such a high demand for it, especially, in a lot of college towns, and the one that I live in right now, Cullowhee, it's a smaller town. So the majority of the housing that's in and around Cullowhee and Sylva and the surrounding area is for students. And there's just, the community doesn't seem to be meeting the need of the amount of rental properties that students are demanding. So obviously that drives the price up for rent, which is a good thing. So there's opportunity there. The real estate market's in a downturn, could provide an opportunity to acquire foreclosed homes, whether at an auction at the courthouse, at a much cheaper cost than in recent years. So that's an option to explore. There's always opportunities there, especially with the market being so low right now. Buying a house is not necessarily the worst thing from a cost perspective. So moving forward, opportunities: company structure that is suited for slow growth that hopes to produce a snowball effect of income as company profits are reinvested into acquisition of new assets. So you're gaining some income, you get one property paid off, you get the mortgage paid off, you own it, it's still producing profit for you. You take that money, you put it into another property that you eventually start paying off, and then you kind of have a snowball effect of growth in the company. So there's an opportunity there with that structure. Obviously there's some inner workings with that, but opportunity with taking that profit, reinvesting it back into the company, into something that's going to continue to produce profits that you can not guarantee, but make a safe assumption that the property will produce profits coming back into the company. Ownership's current career requires living within close proximity to university campuses all across the country. Promotion within ownership's primary career could provide opportunity for purchasing of assets at several different locations. So if I'm coaching at Western one year, Western Carolina here, and then I'm coaching University of Texas the next year, hopefully, or maybe Florida State the next year after that, obviously there'll be opportunity there to purchase more homes within close proximity to the campus. And I could kind of do that within my other career and kind of move through as you go. Keep purchasing properties at different locations, and each new location could provide a new opportunity, just depending on how you look at it and once you explore your options there. So moving forward with the SWOT analysis, I would say threats. Fluctuations in the real estate market could cause a loss of value if assets leverage were to fall below initial value. So obviously, a lot of people got trapped when the real estate market crashed, back in 2006. But there were huge losses. So you don't want to buy a house for $100,000 and be paying the mortgage on it and have the mortgage for that note, and then it dropped to $60,000. Obviously, that's a threat to the income of the business and to the financial health of the business. Tenants' failure to pay rent could halt cash flow within the company, causing problems with mortgage payments on properties. So, tenant doesn't pay rent, that causes a problem because that's your primary source of profit from the company. Tenants paying rent and bringing that money in every month and yearly, and being able to reinvest it back in the company. That's kind of your cash flow, or would be our cash flow there with that. But there's a large amount of companies and independent owners with desires to pursue the same area of the student rental real estate market. So you have a lot of people, whether they're independent or these large conglomerate type rental companies around these campuses, that have a desire to cash in on the high demand for student rentals. So you have some competition there. But you'd like to think that the demand, is still needed and still needs to be met, even though there is some competition out there. But that's competition. You have to deal with that and at least provide, a comparable or superior product, depending on what type of properties and assets you were able to acquire. So with anything owning a home, the last one here, natural disaster or a common household threat such as fire, tree falling, etc., could cause serious damage to property assets that could result in large losses and financial risk to the company. So obviously, if you run into a situation where something off the wall happens, a natural disaster, or a fire or something like that, and your insurance won't cover all of it, you're at risk there. There's a threat to the financial health of the company if something like that did happen. So that's a pretty large threat there. The house burns up, the insurance doesn't cover all of it. You run into some problems there. But those are the threats, and that kind of closes up the SWOT analysis of Lighthouse Rentals, which is the preliminary workings of a company that I hope to once establish one day. But anyway, thank you for listening. This is Pat Mills signing off. Thank you. Bye-bye.